Welcome to this week's Earnings All Stars. And you know what that means? I'm bringing you 5 stock charts to take a look at this week, which is an intriguing week. We're mostly done with the Magnificent Seven. We only have Nvidia left to go, and they're not reporting this week. So, what's to look at, right? But there are a lot of prominent companies. And this week, I chose some that have been in some form of trouble in the last couple of years. We're going to take a look to see what do their earnings track records look like, and are they able to turn it around? Are there some deals with these particular stocks? Let's dive right in. The first stock out the gate is Disney. And we all know what's been happening with this one. You can see from the chart, but interestingly, they put together 4 beats in a row. It hasn't really mattered to the stock that much, as it appeared to have bottomed at new 5-year lows there in the fall of last year. It has rebounded off of it, and it's getting a little bit of a rally, but over the last year, it's still down 12.7%, and 5 years, it's down 13.3%, with the S&P up 83% in that time period. So a lot of pain for Disney shareholders. But is it cheap? PE is still at 22 times, so not that cheap, but people are very loyal. Disney still has the strong brand, so we'll see what happens this quarter, but this is one everybody's going to be watching. Okay, the next stock is another one that's similar to Disney that I've talked about in the past, PayPal. PayPal, look at this chart. It's got a great earnings surprise track record, just those 2 misses in the last 5 years. So that's pretty impressive. But even with the earnings streak it's put together with 7 beats in a row, that's not really impressing the street. The street's worried about growth with PayPal and a lot of competition from, say, Apple Pay or Google Pay, and that PayPal may be slowing in the growth category. And so you're going to pay less for it. Over the last year, these shares are down 28%. And now 5 years, they're down 33.6%. So big declines there if you're a long-term investor. Now trading at 11 times. It was trading under 10 times before this little mini rally you can see here after the last earnings and after those fall lows. So will it hold this rally? What's going to happen with PayPal? This is one, again, everybody's going to be watching. Then I'm going to switch over to the retail side with Tapestry. We've talked about Tapestry, which owns Coach, in the past. And this is an interesting chart, right? It does have 3 misses. There's one just almost off the chart here. And otherwise, this was the second one was right when the earnings or pandemic hit. So not surprised. And then we had one last quarter. This was a rare miss, but barely, just 1% miss. No, sorry, 2 quarters ago, just 1% miss. They did rebound last quarter with the 3% beat, but shares did bottom there, it looks like, again, in fall 2023 before the big rally. So over the last 3 months, these shares are up 44%, but 1 year still down 12%. Now, remember, they're buying Capri Holdings, and that's supposed to go through shortly. So we're going to be finding out more about what's going to happen with that, maybe even what their plan is on this call. We'll see. Shares are still cheap with a PE of 9.8. Dividend still generous, yielding 3.5%, but it has had this big rally. Can it get up to, the 52-week highs here? We will see. Then we're going to leave retail to go to travel. So Expedia, the first of the big travel names to report on the travel online travel agencies, and Expedia, ticker EXPE. I own it in Zacks Value Investor Portfolio. It too has had a nice rally off of those fall lows. And over the last year, shares are now up 27.8%. It's put together a nice earnings surprise track record since here in mid-2022. Only that one miss there, and it was a pretty big one, down 31%, but it's managed to turn that around the last couple of quarters as travel remains hot And China obviously got rid of its zero COVID policy. So that helps all the online travel companies as well. But is it too much too soon with this stock? It's still cheap, trading with a forward PE of 12. But we'll see if we can continue with this outbreak or this breakout here in 2024. And then we're going to wrap it up with one of my favorite stocks, which is Pinterest. I used to own this in Zacks Value Investor portfolio, but we did sell out in 2021 when it hit our sell stop. We bought during the pandemic when that hit, and then we sold out in 2021. Had no qualms about selling out as it was getting a little more interesting with the revenue growth side with the advertising. But look at this earnings surprise track record. Great earnings surprise track record, just 3 misses, including only 1 since the pandemic hit, other than the 2021, which many companies missed right when the pandemic closed, lockdowns happened. But this stock has had some big beats, including last quarter here with a 33% beat, and the quarter before that, 75% beat. So what is happening with Pinterest? Some of the social media stocks beginning to see a turnaround, especially as advertising starting to come back after being cut in 2022 by a lot of companies. So we're at 52-week highs. 1 year, these shares are up 44%, and now a 5-year return of just 8.8%. Remember, S&P up 83% in that time period. But maybe it's the time to get back into Pinterest. PE of 30, so it's not dirt cheap on a PE basis, but earnings expect to be up 72% in 2023 and up 22% again in 2024. That's nice earnings growth with a PE that's fairly reasonable. So this is definitely one I'm going to be watching this week. So as you can see, it's kind of a mixed bag with the stocks that are reporting this week, at least in this group of 5. But we're going to have over 500 companies reporting again this week. So there's going to be a lot going on. I'm going to be tweeting out a lot of the stock charts this week, as I always do. So you want to be tuning into my Twitter to see those. Just at my name at Tracy Reinick on Twitter to see more of these stock charts with the earnings surprises. And otherwise, you can get all of our videos. I'm going to continue on next week because we are still going to see hundreds of more companies reporting in the next several weeks, a lot of them on the smaller cap side, and then the retailers. So get them all at Zacks.com/YouTube. And I'll see you again next week with some more earnings charts.